We have with us today Mr. Mafaz Ishaq, the moderator from Director Adl Capital. Joining him on the panelist, we have Mr. Krishan Thilakaratne, Director and CEO of Commercial Leasing Company. Mr. Riyaz Mihular, Managing Partner, KPMG. Ms. Rosemary Fernandez, founder of transformational coach and change management expert, Coaching Works Canada. And also Mr. Suresh Perera, Principal, KPMG. Mafaz, over to you.
Distinguished panelists, honored ulama, fellow participants on Zoom and live streaming on Facebook. Assalamu alaikum. I will be your moderator today. My name is Mafaz Ishaq. On behalf of UTO EduConsult, allow me to warmly welcome each one of you to this panel discussion on operating in a post-COVID-19 era. UTO EduConsult is pleased to host this event for the very first time as online. Mr. Mihular, if I could start with you, could you give us a brief overview of the implications to the Islamic banking and finance industry of the recent announcements by the Central Bank of Sri Lanka on the reduction of the statutory reserve requirement, SSR, to 2%?
Okay, well, something's gone wrong with the video, but it's okay. Maybe I'll go without the video. Okay. Yeah, I think we are all aware that the central bank reduced the statutory reserve ratio by 2%. Personally, I think this is not the right move, because already, if you look at the banks, they already are sitting on surplus liquidity. I think approximately the last I read, we almost have about 150 billion of surplus liquidity in the market, in the banks. And now this has added another 112 billion into the market. The problem, I think, is misplaced. You see, people think that the banks are not lending to the SMEs because of the fact that there is not enough cash. Actually, the reverse is the true. There is cash in the market, but the problem that is there is that the SMEs don't have collaterals. So the banks ultimately, who have to take the credit risk and who have responsibilities to their stakeholders like the deposit holders and shareholders, will be reticent about lending when there is no collateral. What I think they should have done, and this is something that I have said, there were two possibilities that the government should have explored. One was a couple of years ago, 2017, a report was done on setting up a credit guarantee scheme, something like the export credit guarantee scheme. The structure was all done. It was funded by the ADB. How it's going to operate was all done. So, for example, if I borrow, the premium on that, just like we do for mortgage-backed insurance, the premium on the mortgage-backed insurance is added onto the loan and you pay it or repay it over the loan period. They would have added a premium on for example, this credit guarantee into the loan, and you repay the loan over the period. So that takes away the need for collateral, and therefore you will find that there will be greater willingness on the banks and financial institutions to lend to SMEs and the sector that needs the funding. I know people might say, okay, that will take time to get it up and running. But in the interim, the central bank, and I think it is section 183, I can't remember the exact provision, has provisions to guarantee loans. In certain countries, you will find that central banks have stepped forward and guaranteed SME loans up to certain limits. They can place whatever limits they want and whatever conditions, but central banks have guaranteed the loans so that the banks can lend willingly. The credit risk issue is taken away. and that I think is the way forward. So personally, I think the reduction of the statutory reserve by 2%, increasing the liquidity, to my mind, won't help the problem. I think the problem of lack of collateral and the non-bankability of some of the SMEs is still an issue until you solve the guarantee problem. Of course, there are implications for this. When you do this, the interest rates are going to come down, and the prime rate is going to come down. And while this has an advantage for so those are some of the issues that I see. So personally, I think while this does give the feel-good factor that there's a lot more money in the market, I don't think it is going to solve the problem of getting money into the hands of the SMEs.
Thank you, Riyaz. Mr. Krishan Thilakaratne, could I invite you to make some comments, especially relating to non-banking financial institutions, about this, and what Mr. Mihular talked about in terms of bringing credit guarantee rather than the liquidity into the marketplace?
Yes, good evening, everyone. Thank you for inviting me to speak on this important webinar. So I think if you look at this COVID the issue that happened, it affected banks, non-banks, Islamic banks, everyone equally, right? It didn't leave a race or a religion or a gender or nationality. Everyone got affected. So, but if you look at the local scenario, I think the first thing the central bank and the government came out was with a moratorium announcement. And then everyone, I think there was too much of hype created about these moratoriums, because I think it was seen as the solution. In my view, it was only a very temporary solution. The long-term solutions have to come, basically have to be looked at. You asked me the question of what Mr. Mihular said. I think he was spot on in what he said. This reduction of 2% is actually definitely far from the solution. Like Mr. Mihular said, basically the market was already excess, right? And then pumping further money into the market is not the issue. What these moratoriums and on top of that, the mindset created in basically telling the people, okay, you could just postpone your payments, and then even they went on to the extent of saying, okay, loans can be waived off. That created a bit of a bad mindset amongst the borrowing clients, which is actually the fundamental of banking. Banking is based on basically customers' basically intention to pay as well as the capacity to pay. Yes, we understand in situations like this, basically there will be concerns about customer cash, liquidity, payment capacity, but we should not disturb the customer's intention to basically moral hazard of basically paying the obligations. So what actually happened was, although the banks had liquidity, they went into a shell, because on one side you're basically discouraging people to pay, and on the other side basically asking the banks to lend, right? So banks went into a complete shell, and that was definitely the case of NBFIs, because NBFIs, if you see, unlike banks, they lend against category B, that is category B collateral, right? They won't have the primary properties, they won't have the primary assets. So they depend a lot on customers' intention to pay, right? So the NBFIs completely slowed down, and as we all know, NBFIs cater to the micro and low end SME markets. So that credit was completely stopped. If you look at the NBFIs, actually NBFIs were a real bad victim, because if you look at the NBFI industry, everyone talks about it as a problem child. Okay, it has weak companies. So NBFIs are a very weak, it's not a very strong industry. But if you see the industry, the top 15 players, that is 25% of basically industry, the top 15 players hold a 90% market share, right? And then every time we talk about the NBFI industry, everyone basically it's spoken as if it's a very weak industry and we need to solve the problem. And there are, yes, we are completely agree that that problem has to be sorted out. But when the 90% of the market share, that is in terms of the asset base, deposit base, the capital is basically within the top 15 NBFIs who are actually quite strong. Some of them are as strong as banks or probably stronger than the smaller banks. Right? I think that is, NBFI industry should be looked at from their point of view. See, the NBFIs create a massive financial inclusion. If you look at the Sri Lankan economy, about 60% falls into the micro and SME category, which is the SME, which is the NBFI industry. Being in the Board of Credit Information Bureau, right? We see the credit reports, CRIB reports obtained on month-on-month basis. 55% of the CRIB reports are obtained by NBFIs, while 45% of the CRIB reports are obtained by banks. Yes, banks are, the NBFI industry, only 6% of the entire market, but in terms of number of customers, they cater to a higher number of customers. So, when the credit culture is disturbed, so then obviously there's a huge lack in credit flow into the market, right? So that is exactly the problem right now. I think we saw recently President addressing the central bank, and there he's frustrated, not happy with credit flows going into the basically relevant sectors. But I think the solution for that is not to increase further liquidity, is to create that credit culture that people need to pay. But obviously he can, on his capacity and of course through the tools available through the monetary board, central bank and all that, he can ensure that there is adequate credit flows going into the market, right? I think that is the most important thing. And at the same time, we need to create a systemic stability. Obviously, it's not only the lending client, the deposit client is also very important. That confidence has to be placed on the deposit clients. Now we see a lot of damage control is being done, but I think the damage shouldn't have happened at the first place itself, right? Certain very responsible statements were made about the industry, about the banking industry. I think these have to be very carefully thought of. Yes, we are facing basically a unprecedented time, something that basically 1 in 100-year event has happened, and there are so many things are happening. But I think still the banking sector, like just like the way Mr. Mihular said, banking sector stability is critical, right? And banking sector, I mean, you don't need to force banks or NBFIs to take a loss. There will anyway be a hit on their bottom line, the liquidity, all that, right? You don't need to force them, right? So the thinking that banks are making too much money or NBFIs are making too much money is actually the complete wrong perception. They need to make money because the banks and NBFIs are the most capitalized institution in the country, right? I mean, if you look at the capital infusion, capital employed in NBFIs and the banks run into trillions. So obviously that will generate profit by itself, right? So you don't need to force them to say, okay, you have to take a part of the hit, because banks are the solution. So, and you can't make the banks and the banking sector weak. And the moment that happens, banks are going to get into a back foot, and they are not going to basically do their job of ensuring that the money flows, right? Banks are only a post box. Banks take the money from the depositor, lend the money, collect the money, pay back the depositor, right? And then in this context, deposit is a key aspect, and the depositor needs to have the confidence in the banks to invest, right? And if the banks don't show adequate basically stability in terms of the capital, in terms of the returns, the profits, return on equity, all that, no one is going to come and invest on the banks, right? So I think what is being disturbed is the most important thing right now. So banking sector stability, NBFI sector stability has to be taken very seriously. I think this country has 25 banks and 41 finance companies. But if you really see, unfortunately, 40% of the people still borrow. When I say 40% of the population, only 40% of the total borrowing still happens from the money lenders, informal money sector. There is more than enough banks and finance companies to cater to this entire market, right? But just that credit culture has to be developed. It has to be preserved. And we see that even in countries which have a much smaller per capita income, like Cambodia, Myanmar. I mean, Myanmar, you're talking about a per capita income of 1,200 rupees. Cambodia, $1,200, $2,000 in Cambodia. Credit culture is fantastic. So there's enough credit flowing into the system, right? Actually, there are plenty of DFI money coming, and then what you see is continuously cost of funds keep going down and the cost of credit keeps going down. So that system has to be inculcated here. So I think basically it's not only the bank, in the regulator, the policymakers have to take this very seriously into account. And market needs money, market needs working capital. This is what Mr. Mihular said. Inadequate collateral, even that could be dealt, but if the proper credit culture is created. Right now, the entire banking and NBFI sector is have gone into a shell because of this mindset created in the eyes of the public. Thank you.
Thank you, Krishan, and thank you, Riyaz, for contextualizing this. And given the current scenario, I hope the politicians and the relevant authorities are listening to this. I think both of what you've said resounds well with me and with right-thinking people, I hope. Riyaz, if you could just give us what some of the impacts that you're seeing of COVID-19 on the global economy, from where you sit at KPMG, as well as what you see in the region, and if you could just give some of the highlights. You need to unmute, Riyaz.
You know, if the latest reports say that the global economy will contract by 6%. So we're going into a global recession. And if we think in Sri Lanka that we are not going to be impacted, I think we are living in a cuckoo land or a fool's paradise. We are going to get impacted. A lot of our exports are to Europe and US. If you take our garment industry, I was hearing a industry sector person saying that garment exports have dropped by as much as 80% in orders have dropped. And I'm not too surprised, because I think everybody's stuck inside houses. Nobody's going to look at fashion clothing now. So that's only one sector. Tourism, a lot of the other sectors are all going to get affected because nobody's going to travel. Just imagine going 6 hours before the airport. So there is going to be a global impact. Now, what happens in the situation like this? My mind goes back to a saying that Charles Darwin said. He said, it is not the strongest of the species that will survive, but the one that is most adaptable to change. So I think in this new norm that we are going to see post-COVID, those industries or companies who will come out of this relatively unscathed, I don't think anybody will come out totally unscathed, but those who will come out relatively less unscathed, less hurt, would be those who are nimble and agile. Now, for example, I was pretty pleased when I heard that some of our top garment factories have switched to producing PPE, preventive clothing. That's a way where you can use your strength to quickly change from fashion clothing to, preventive clothing, because that's the need of the hour. But for that, the important is the companies must have the right structure. If you have an embedded hierarchical structure, then it makes it very difficult for you to be agile, right? You need for that. That's why you will find that I think that the startups, the more younger companies will do better. And I'll give 2 examples. I was just saying during the lockdown, I think I pick me as one who did extremely well. I mean, they got into gas delivery, they got into to delivery of provisions, and mind you, they were more reliable than all of these other big supermarkets, because you order 10 items and you have to wait 3-4 days before they'll deliver, but you give to PicPay, you know they will get it. And they'll tell you, they'll track you how they are collected when they're delivering it. So that was one where they knew the customer was gone, no rides, no hailing of rides, but they used that infrastructure to quickly use that infrastructure to good use. Similarly, I found on an Uber, you could pay your electricity bills and they're giving a discount for paying electricity bills on Uber. So this is where people are using certain USPs that they have to quickly meet the changing needs that post-COVID is going to bring. So if you ask me what the impact of COVID-19 would be, COVID-19, I think, will do more to technological adoption in Sri Lanka than anything else in the world, right? People who didn't know anything about bank transfers are now talking. Just the other day during the lockdown, somebody came and gave milk, there was some distributing milk. So I said, do you have credit cards? He said, no, not yet. I'm not accepting, maybe next week. But you can send it to my account. And he gave me a sheet of small chip saying, here is my bank account. You can transfer the money. So, so I thought this is just an individual guy using his own vehicle to do transporting, things. And so so what I'm saying is there's going to be huge change to what I call an omni-channel in the distribution, and companies who can do that will succeed. I just want one little point I want to say, and this is the point in regard to delivery. All of the people do a lot of investment on their front end. If you go to the website, you get swanky websites with beautiful payment gateways, but their last mile delivery is a disaster, right? The first time when in lockdown, I ordered 35 items and I got 3 items, and they had to return all the other balance cash to me. So it is important for organizations to understand that when you do in an environment into a new channel, like what COVID has brought about, that it's not just what is out there for people to see that is important. You have to also look at all the processes back end that needs to be attended to make sure that you support the entire process. So I'll just stop at that, and sure others can contribute as well. Thank you.
Thank you, Riyaz. I'd like to bring in Rosemary. You see that we're now making drastic changes, and it's having an impact. What do you think are some of the basic principles and social aspects that need to be focused on in a pandemic impacted market?
Thank you, Mafaz. Firstly, I want to say it's just splendid to be virtually in Sri Lanka after 14 years. I've been away 14 years, and to be part of such an august group of speakers and panelists. I will be coming from the human aspect of the impact of COVID. I'm listening to bankers and economists and money, and I could echo what our prestigious keynote speaker, Mr. Siddiqui, said, and the other panelists that have talked about money and banking, and it all sounds very scary, but money is the foundation of what makes everything move. And as I'm hearing from you, what's happening in Sri Lanka is really no different from what's happening all over the world. The same experiences are happening here in Canada, in Ontario, in Toronto, where I live. I'm hearing the same conversations. So it means we're all globally impacted. And of course, it's due to the closures of workplaces and social places, there hasn't been money flowing around. I have been fortunate that I live in an economy, and there have been countries in Europe and here Canada, USA, where the governments have provided quite decent subsidies for people who have been affected. And so we've been getting monthly subsidies to keep the cash flow flowing into the economy. But even though there is that money flowing in the economy, the global impact has been very psychological, in the sense that people have started to think. We've been home for 3 months now. You know, we've been started to think about life and what we do with our money, especially, and where we spend it. And so that impact is going to be global. You know, we're going to spend things more on, we're going to differentiate between wants and needs. There's going to be a big change in that. The big money, you know, in Sri Lanka, you have the tourist industry, you have the manufacturing industry. So post-COVID, that's where large groups of people come together. That social distancing is going to change. That's going to have so much impact. I want to also talk about, when I said psychological impact, we have terminologies that we use to label what people are feeling globally. And one of them is that we've gone through the current pandemic. We've been in it 3 months, and now we're talking about post-COVID. But there's also a threat that in October, November, we may get another influx of this COVID virus again. So we're all in the back of our mind carrying something what we call anticipatory grief. We're still living in uncertainty. And so we have this little baggage that we're walking around with. We're dealing with anticipatory grief, and then we are also dealing with something else called adjustment disorder. So we're working in a different way now, you know, and that is something that's going to impact us globally. I could say a lot more, but I will get into my answers of my other questions. So I'll stop here and maybe hear from another panelist.
Thank you, Rosemary. Suresh, would you like to talk about some of the impacts that you've seen in the local markets of the pandemic and what's happened?
The pandemic is not just a health concern, and it has impacted all forms of markets, including the financial market. Now, we are actually in the 3rd week. I would say it started somewhere in December, so it's almost 6 months gone. And what we find is some of the countries are relaxing their rules, or they're coming out of the lockdown. But at the same time, we see some of the countries witnessing the 2nd wave also. And at the same time, we do see basically people are getting used to social distancing and restricted traveling, working from home, all these concepts. Now, when we are basically trying to focus on something here, now I think we need to look at, there are different areas that we need to look at from the Sri Lankan context. I would, daily wage earners, the plight of the daily wage earners is common, not only in Sri Lanka, in all the other countries as well, but it's not only the daily wage earners, even the fixed income earners are impacted. They find, okay, some of them are out of their jobs, and some of them are finding their salaries being reduced, and at the same time they have to finance their fixed commitments, the loan payments, credit card payments, and all the other financial commitments. So what do we have to, what can we gain here? What can we learn from here? I think first thing for me is basically to live within the means and the importance of saving. Savings is important, and to live, don't expend on unnecessary things, live within your means is a key thing, basically, I think, to face the COVID from at a very ground level. And then another thing I think we have to be mindful is the development of antisocial activities. Because of the scarcity of the resources, because the many people are basically finding it hard financially, and there is a tendency to develop antisocial activities like the robberies and the burglaries. And I think there is a big role for the government to play here to ensure the law and order will continue, and there will not be escalation of the antisocial activities. And also, I think we need to ensure that there is access to healthcare to everybody equally. Of course, the people who have the ability will get the access, but then as a policy, I think the government should focus on extending the healthcare services to everybody equally. And to me, I think the most important thing that I think most of us have not actually addressed this issue is the impact on the education. During the last 3-4 months, people are not having access to their normal education means, but at the same time, the people with the facility are moving into virtual learning. So the people who have the capability, I would say the affluent sector of the society is continuing with the virtual learning, but at the same time, there's a big impact in the country where there are areas where there is no facility for virtual learning, and that's basically the not so affluent segment is impacted. And I think the government has to focus on this to ensure everybody will be in a position to continue with their education, because if the education actually is a great level in any society to ensure there is equality, or basically the gap between the rich and the poor is always being bridged by the education. So if there's no access to education, and that education is going to be is accessible only to the people with virtual learning facilities, the gap between the rich and the poor in the Sri Lankan society is going to be widened. I think that's one aspect that we need to keep in mind when we are facing this pandemic going forward, because the impact of this pandemic, I don't think it's going to be going to disappear within 2-3 months. This is going to be a long-term thing in the country and everywhere else also. And then the next aspect, I think, is from the point of view of the regulations, the laws governing the virtual trading or the virtual learning, online payments, cyber security, etc. Because of the pandemic, we find that there's a great concentration with regard to carrying on normal day-to-day activities using technology, making online payments, online delivery of the services and goods, and that results in security issues coming up, cyber security issues. So there should be laws to address this area. In Sri Lanka right now, we do have a couple of statutes like the Computer Crimes Act, the Electronic Payment Devices Frauds Act, etc. But I think this is a time now, basically, we need to check the robustness of these statutes, the area, and wherever there are gaps, we need to address in Sri Lanka. So that's my take, Mafaz.
Thank you, Suresh. Krishan, could I just bring you in? You talked in your opening statement also about the issue of the moratoriums and the mindset that creates. What is going to be the impact that this has on going forward for the industry? And
like I said, the moratorium is not the full and final answer. I think we need to assess the situation in 6 months and probably even going beyond that. In my view, there are certain industries that are more affected, and there are certain business types that are more affected. In general, if you ask me, what I've seen is the businesses which have high capital have got more affected, because your basically return on capital, the amount of debt basically is high. So those businesses are more affected, especially manufacturing, tourism, especially when it comes to tourism resorts, construction industry. Those are have got more affected. But in comparison, industries like trading, agriculture, then transport sector is less affected, right? Because they are not that much of high capital intense industries. See, I think like Suresh said, I mean, we don't know how long this issue is going to be, and I think there's a very good possibility that there could be a second wave as well. I think, except for I think 1 or 2 countries, basically all the countries are looking at controlling this issue and not a complete eradication, right? I think probably New Zealand is looking at eradication, but I think other than that, or 1 or 2 countries, basically it's how you control it and how we can manage this issue. So I think even the banking, that is on the health side, right? But I think even the banking side, we need to look at it the same way. This issue is going to be there for some time, right? Whether we like it or not, it's going to be there for in the medium term and also probably into the long term. Probably it'll impact could be there for 5 years or probably even more. So, so how the banks could basically go about their lending activity, how the customers could customer repayment capacity, how we could restructure facilities, basically all that is important. And then basically banks will have to go down to micro level, speak to every customer in basically in giving solutions, not just general solutions, and basically customer-based customized solutions. So I think even Riyaz touched on this. If you look at the customers, right, it's the customers who have the biggest agility will obviously will be the best to come out of it in terms of their cost structures, their sales volumes, in terms of their business structures, management structures, their product range, flexibility. So I think those customers will probably recover fast, and the other customers would need a longer tenure to come out of this. But banks have no choice. We have to live with those customers, and eventually, use all the tools available within the banking. I think Islamic finance, in comparative to conventional finance, has limited tools, because in terms of liquidity, they have limited tools. Basically, even if we want to reach to send basically the regulator in the local context, central bank is a lender of last resort, right? But that option is not available for Islamic banks at the moment. Sovereign bonds, in terms of both assets and liabilities, both, right? So we have a bit of an issue in the Islamic banking front, but whatever the tools that they have, they need to use it, and then obviously restructuring and all that is possible within Islamic finance. But the banks and the NBFIs will have to understand this is not a short-term problem that is going to go away in 6 months' time. So they need to basically look at medium-term and long-term solutions to their assets, especially to their asset portfolios.
Thank you, Krishan. We're running out of time. I'd just like to ask Rosemary, what are some of the steps employers should be taking in dealing with the psychological impact on staff and other stakeholders?
I've been busting to share this information because I'm listening to all what the other panelists are saying. More than surviving the virus, the COVID virus, is really being able to deal with the mental impact of COVID. So it's taking care of the mental, emotional, and physical impact of COVID on all stakeholders, which includes workers in the workforce, people, decision makers, leaders. And what people are really going to suffer from is if they don't have security of the environment in which they work in. So they're going to have to go from the norm to having health and security issues in the workplace. that it's a clean environment. We're going to be dressing differently, wearing masks, maybe shields in some cases, gloves, ensuring sanitization of the workplace. People are going to be wanting to know about continuity of employment, loss of job. Are we going to downsize because we're not going to be manufacturing as much? We don't have so many tourists coming into the country. We don't have food that's coming in. We're going to have to grow our own food. We're going to have to look at leave policies. We're going to have to look at the way we communicate with people. Because you're under strain and anxiety, we might see a different style of communication. People are going to be expressing their fears, and as leaders, we're going to have to be patient. And maybe, you know, over here we say we're going to have to use please and thank you a lot more. Yesterday, I posted an article on LinkedIn where it was a share, and this writer talked about, we've always been saying as human resource people and training people, think out of the box, think out of the box. But actually we're now saying, keep your box, but look deeper into your box and see what you can find in there. And you know, another friend of mine shared something really that we can relate to from the word react. If we move the C forward, we get the word create. So rather than being reactive, we need to be more creative in how we're going to change this norm. And we're never going to ever go back to what life was like in January. Once you go through a change, you've gone through a change. People are, you know, I am very technophobic, but I'm being forced into learning more about technology. My work is all virtual. I'm also a very social person. And I think about the best social life I ever had was when I lived in Colombo. So I can see that impact. The social impact is going to be quite tremendous for people who like get-togethers and working together, whether it was in the workplace or outside of the workplace. The social distancing is going to be something that's going to be a little longer term than we thought in the short term. And then your social life is going to be restricted to the people that live within the four walls of your home. And that can have its own impact and its own anxieties too, because there's no release, there's no outlet, there's no entertainment. And also workplaces that offer food, cafeteria, teas. What wonderful tea you get in Sri Lanka, I miss it. Okay, and also having to open workplaces in stages, maybe having rotational work that goes on 24/7, so that not so many people are in the workplace at one time. And so it's about creating what if scenarios and strategic plans that encompass all of these many issues that I have mentioned.
Thank you, Rosemary.
Okay.
We're running out of time, but there's one question from the audience that I'd like to take. Do you foresee sizable job losses in the Sri Lankan economy? And what has been the impact to today? If I could start with Riyaz.
Yeah.
Yes, I think there will be sizable job losses for sure. Already we are seeing it. Yesterday, last Sunday, I went to Cinnamon Grand for a little dinner. Came out, they didn't have a doorman, and I had to push the door because I was pushing my granddaughter's pram. So they have got rid of the doorman all because they are all cutting costs. I can imagine, you know, the restaurants were deserted. So there is going to be job losses, and some sectors are going to be more affected than the others. But the only point that I want to say is that I think we have a relatively young population, a working population, and we also have a relatively literate working population. So I think they need to reskill and or upskill what they know so that they can shift into, because while there are certain sectors will have reduction in losses in jobs, there'll be other sectors where there'll be need for resources. So I think it's important, again, while I talk of agility in business, you also have to talk about agility in your own personal career structures.
Thank you, Riyaz. Krishan, would you like to add anything?
Yes, I agree with Riyaz. I think job loss is inevitable, so that's going to happen. But whether they are going to be permanent or not, it depends on the industry that you are in. I think what the people have to do is but what has happened is I think the agility even in your own capacities. I can give you a very small example, which is very directly applicable to NBA 5. Now we have financed so many daily wage people, right? And during this lockdown period, we saw all these daily wage people going back home, and they did not have their regular daily wage regular jobs. But what they did was they went back home and they got into a little bit of agriculture. They cultivated something, and then when they came, basically at the end of the period, their incomes were not that drastically dropped. And what we actually observed was these people refused to come back to Colombo now, right? Because they have realized going back home, it's probably you have a better life. You can do something there itself, right? So they got adapted. And I think that those people were least affected, right? So that's a very example at a very bottom of the pyramid level. But I think at all levels, right, people need to basically upscale. People need to should be able to develop new skills. And also this country, now we might see the migration, right? Especially the countries which have very high migration populations like Australia and Middle East. You might see some of those workers coming back, right? And that could be basically some of the highly trained employees, right? So the companies here might want to take them back, right? So I mean, that is also an opportunity. So basically, even the local workforce now need to understand you're going to get new competition, right? Imagine now, especially the students who migrate, it's a very, very common thing, might not have the same opportunities going forward. So those students will probably be back in the country. And then we basically the large corporates or whoever, SMBs, would prefer to hire those, right? And then the opportunities that were available because of lack of skilled employees might not be there. So I think everyone has to get skilled. Will have to upscale their skill levels. And I think those are some of the opportunities I see, or the good things that I see that might happen because of this COVID situation. Thank you.
Thank you, Krishan, and thank you, Riyaz. I have run out of time. Just to summarize, there's many, the post-pandemic sustainability is about adaptability. As Riyaz mentioned, to quoting Darwin, it's those who adapt, and what Krishan just brought in and Suresh and Rosemary all alluded to. I'd like to thank all of the panelists for their time and consideration, and to hand it back to the host.
Ladies and gentlemen, we'd like to take this opportunity to thank Mr. Krishan Thilakaratne, Mr. Riyaz Mihular, Ms. Rosemary Fernandez, and Mr. Suresh Perera for being on the panel, and our moderator, Mr. Mafaz Ishaq, for their time, valuable time and knowledge sharing.
Before I come to our deposit base, I would like to mention Mudaraba profit returns are the most, I think, one of the most affected areas due to this pandemic. As you know, our incomes are got delayed, most of the finance companies or banking institutions, and there's a direct impact of Murabaha or Musawama income because it won't come within this moratorium period. So there were so many complicated. As a result, the distributable income, which is there to be shared between the investor and the company, can be reduced because of this problem. But Alhamdulillah, as far as CS Islamic Finance concerned, we experienced during past 9 to 12 months a surplus of distributable income when comparing to central bank threshold rates. We were always above the central bank ceiling rate, which are permissible to distribute to the customers. Therefore, with the permission of the Sharia Supervisory Board, we created the reserve called Profit Equalization Reserve, and we parked our excess profits in that particular fund. So we have been, even though there were little bit of an effect due to this pandemic to our overall distributable income, we managed to take out some funds from this profit equalization reserve and to distribute our Mudaraba depositors. And currently, still they are enjoying the highest returns in this finance industry up to date, which we have been maintaining throughout the period. Especially in this pandemic period, we have not experienced such large withdrawals from our customers. There were few withdrawals, but up to now we managed to retain our Mudaraba base without any problem.